Financial results season, eagerly awaited every year as the performance of listed companies on stock exchanges are a very good indicator of the state of the economy. This is Business 7. Welcome to the program. In this one, we are going to focus on the annual financial results of locally listed Capricorn Group. We're lucky enough to have some of the top management of the group with us, so please stay tuned. Capricorn Group recently announced its annual financial results for the year ended the 30th of June 2022. We are joined by the Group Chief Financial Officer of Capricorn, Johan Maass. Thank you very much for joining us and welcome.
Thank you very much. It's nice to be here.
Before we dig into the financials, let's have a look at what the initial thoughts of local analysts were. IJG Securities said overall Capricorn Group's diversified portfolio delivered impressive results given that the economic environment remained challenging, with earnings coming in line with our forecasts, but advances and deposit growth ahead of expectations. And then Cirrus Securities kept it short and sweet. They said these are very satisfactory results from Capricorn Group. Lastly, Zenaune Storms captured it like this. We think that Capricorn Group is in good stead to continue riding the wave as we recover from a global pandemic and recession. Johan, wonderful initial thoughts there from a local analyst. You must be really proud of the performance.
Yes, we are. I think it's been a tough period during the pandemic, but it's nice to come back in 2022 with a very solid set of financial results.
That indeed was the case. Well, let's dig into those highlights, and we're bringing you a first slide. Johan, if you can just, in a nutshell, capture some of the highlights of Capricorn Group, that is the overall group, and for the man in the street, the layman like me, maybe just elaborate on what the definitions of the terms are.
Okay. No, I will definitely do so. Thanks a lot. So I think our return on capital is one of our most important numbers that we do like to measure ourselves against. 15%. I think it's still a bit on the lower side as we would actually like it to be, but the growth from 13.5 to 15% during the current year, I think that is great, especially considering that in 2020 that number was 12.6%. And this basically just measures the overall success and how profitable you are based on the capital that you have employed. Speaking about capital, our capital ratio for 2022 is up to 15.8%. This is the strongest that ratio has been for the last couple of years. So we are very proud that number is increasing as well. And of course, for the layman, the higher that percentage is, the better the group and the bank, for that matter, is equipped to handle any possible shocks and losses. For example, the shock that we had now during the COVID-19 pandemic. Cost to income ratio has improved significantly as well. We're down to 51.1%, and I do believe it compares very favorably to our competitors. So this is really how we try and manage our returns, by making sure that our cost that we do incur is value adding, that we're not incurring any wasteful expenditure. Of course, the big news was the profit after tax, increasing by 16.6% to 1.15 billion. It is the biggest profit that we have made to date, and it does trump our pre-COVID profit of 1.015 billion that we made back in 2019. Then on to the earnings per share, 204.9 cents per share, also the highest it has been since the launch of Capricorn. That's a 20% increase year on year. And then for those of us that are lucky to have Capricorn shares, that also translated into a 20% increase in the dividend per share, which is now also the highest dividend that we'll be paying out at 72 cents per share.
Absolutely wonderful news, especially seeing that this is such a milestone year for Capricorn in any case, with Bank Windhoek celebrating its 40th anniversary and Bank Gaborone already in its 15 years of existence. Important when one look at financials is that you also look not just at the previous year, but quite a few years back, so that one can establish a trend. Let's quickly take a look at a slide and we can see those metrics on that slide. If you can point out some of the big numbers.
Yeah, thank you very much, Jeremy. So what we would like to highlight here is the fact that 2019 was pre-COVID, 2020, 2021 mostly impacted by COVID, and 2022, even though we had the third wave, which was quite severe in Namibia towards the beginning of the financial year, 2022 is actually the year where we actually came out of the shadows of COVID-19. And it is satisfactory to note that in the year 2022, in the financial year 2022, all of the numbers are looking better than it did in 2021. Now we as a group don't like to grow in spikes. We like to make sure that we can grow on a consistent and sustainable way, but also I think it is important that we do celebrate the short-term success in the current financial year, simply because of the big impact that COVID-19 had. So it really is positive when we compare 2022 to 2021, but it's also positive when we compare 2022 to the 2019 pre-pandemic levels, which does show that we were able to navigate the storm, and we hope to continue growing in future as well.
Definitely indications there, not only that you've weathered the storm, but that the recovery was actually rather robust. So quite impressive results there. Johan, coming back to the Capricorn group, of course, Bank Windhoek is synonymous with Capricorn, but the group overall so much more than just Bank Windhoek. Let's take a look at your segments and how they contributed to your performance.
Yes, surely. Yeah, so we did start off with a diversification strategy quite some time ago, and I think it has really paid off. When we listed back in 2013 as Bank Windhoek, it was basically Bank Windhoek back then. But with the diversification that came through, I think it really helped us so much that currently only 67%, or only 2/3 of the group's profit is being contributed from Bank Windhoek. And this is really that has helped us to navigate the storm of COVID-19. Bank Windhoek was severely impacted back in 2020, like most companies were. But luckily, from our smaller subsidiaries weren't that much impacted during 2020 and 2021. All of our subsidiaries have actually suffered their own form of COVID at different times, and that actually helped us to navigate the storm successfully. And we do hope that we can diversify even more in future. So not just to have all your profits coming from a single company. Indeed,
a very wise strategy to diversify a group of that magnitude, securing different income streams in tough times, etc. Johan, as you've mentioned just now, and everybody's talking about it, fantastic profits by the group, but of course with that always comes people asking and questioning these huge numbers. But what is absolutely great is to see the value that the group has added, and how the rest of the country and the other territories in which you operate shared in that value. Let's quickly look at the slide.
Yeah, thanks. So I think it's important to note it's not only about profits.
No, it isn't. Although people, it's the easy way out for a lot of people.
Yes.
But this puts it into perspective.
Yeah. So during the current financial year, Capricorn Group created a value of 3.7 billion that we now shared amongst various stakeholders. So our staff benefited from 1.2 billion. That was paid to them in the form of salaries, pension fund contributions, medical aid contributions, and so forth. And we need to note that it doesn't only stop there, you know, because your staff member then goes out, they pay their domestic worker, they support their local butcher.
Precisely.
There's shopping, there's cars being bought. So it really has a snowball effect as well. From our supplier side, we also paid 530 million to them in the current year. And I think what is also nice to note, if we put the suppliers and the staff together, 87.8% of that which we spent was spent locally in the regions where we are. So only about 12% is spent outside of the local community, which I think is absolutely great. We also supported our local governments to the tune of 678 million. That's in the form of income taxes, VAT, and other type of withholding taxes. And I think also this is funds that our governments currently desperately need.
Absolutely.
To help them with the deficits that they built up during COVID. We also, with our social contributions, we spent about 15.4 million towards the communities in which we are, mainly driven by the Capricorn Foundation. And then, yeah, the shareholders benefited from 354 million, that was spent, also mainly local shareholders, and the pension funds as well, they benefited from that 354 million. And that does represent a 72.5% increase over the prior year that was mainly impacted by COVID. And yeah, then we can't pay out everything. We need to keep some inside the company, and that is to expand for future growth, to help us to give out new loans, build new apps, new software, and the like. And that represents about 25% of the value that we created. We actually keep for ourselves. The other 75% is distributed.
It's absolutely staggering numbers, and when you look at that, you realize the immense importance of groups like Capricorn when it comes to keeping the wheels of an economy rolling. Something I would just like to touch on, one talks about shareholders. What a lot of people don't realize is that most Namibians, working Namibians, actually owns a little bit of Capricorn, because if they belong to a pension fund, that pension fund no doubt is invested in Capricorn.
Yes, 100% correct. So if you have a pension fund in this country, you will definitely be...
You'll have a piece of Capricorn.
You will be,
and it's great news because it's performing excellently. Johan, thank you very much for sharing that good news with us. Just after the break, we will be back with you talking to the Chief Financial Officer of Bank Windhoek. Welcome to the Chief Financial Officer of Bank Windhoek, one of the flagship brands of Capricorn Group. That is Mr. Zenaune Kamberipa. Thank you very much for joining us and for bearing with me struggling to pronounce your surname.
Oh, thank you. You actually did quite well.
Practice makes perfect. Yeah. When we've got you back next year, it will be absolutely smooth. Coming back to the matter at hand, if we can have a look at Bank Windhoek in particular, their financial results, and let's look at the breakdown of some of the highlights.
So, Jo Mary, I think I would like to look at the highlights, but I always try to phrase these highlights in three pieces. You know, we always look at performance backwards, which is current performance, which is actually quite exemplary results. Then we look at the engine, which is how are we doing going forward? Which is, are we investing that tomorrow is also still guaranteed at least? And then there's also something, all business worry about is sustainability. Will we be here for another 40 years? Like you alluded to earlier, we've been here 40 years. Now are we doing sufficient to be here the next 40? So when you look at our results on the slide now on the screen, you will see that profit after tax was up 21%, which is quite good given the macro context in which we are operating. Difficult, high interest rate, high inflation. At the beginning of the year, we also had lockdown. So it's quite exemplary. And then if you look at return on equity, up 1.4% year on year, which speaks to all of this. All of this is actually on the back of what we call positive jaws, which is really a measure between how income has grown versus cost. And our income grew 6.3% better than how cost grew. When we look at now the middle piece of what I alluded to is around investing is, we've done this, but we've continued to invest. We are passionate about Namibia. We want to be here another 40 years. Someone said another 100, time will tell. So look, if you look at IT capital expenditure, up 72%.
That's absolutely impressive, hey?
Yes, and that really speaks to our strategy around digitizing so that we remain relevant. We are at the forefront of what new generation customers or consumers need. And then the other side of it, how we measure ourselves, is also customer growth. We're still getting customers up 5.7%, and then satisfaction. If we are not able to provide a service that customers want or speaks to how they want to be serviced, then clearly they won't use us. And then the last part of what I want to cover here is something they call CAR, Capital Adequacy Ratio, which is really around our ability to absorb shocks in the future, unknowns really, at 15.7, and the regulator really requires us end state to be at 12.5, and by that it means that we almost come out of the recession from a position of strength to be able to take advantage of opportunities as they emerge and withstand shocks as they arise.
Also of interest there, and something coming through very strongly is the significant drop in your impairment charge. That is always something very difficult for the layman to understand.
Yes.
What exactly does that mean?
So, the drop in impairment is not, let me phrase it this way. It's not a reduction, because impairment has two ways, right? You have your income statement charge which has come down. But your balance sheet charge, which hasn't come down, it's just grown lower than the year before, which
Precisely.
is what you see in the income statement, right? So, and really it speaks to the question everyone will ask me is that, are we adequately provided? And the question, and when I answer that, I'll say yes, because if I look at our provisions as a percentage of, say, non-performing loans or loans as a whole, we are within ranges we are really comfortable with.
Coming back to a different slide, and it is an unfolding conversation in Namibia at the moment, the absolute muted private sector credit extension that we've seen over quite a couple of years, and the regulator also getting concerned about that. Yet, Bank Windhoek can be absolutely proud of those numbers, as we can see from there. Please just explain a little bit about that.
Yeah, so private sector credit extension was at 3.4 at June, right? And these are the levels sort of we've seen in COVID 2020, 2021, right? Before that, this was obviously way above that or higher. Now, but we have continued to believe in this country. We have continued to support our customers, and we have trended above private sector credit extension the last 2 years. Despite the pandemic, we continue to find those pockets of opportunity, and we are not reckless. We support businesses that make sense, and in some instances, with measures also allowed by the regulator, we're able to support some of our customers through the pandemic.
Precisely,
Yeah. So, at the end of the day, we are a banking business. So we are in the business of giving loans, and I think we'll continue to do so, but just do so responsibly.
That is absolutely wonderful news. I know of a lot of business and quite frankly also households
Yes.
being keen to get back into the game when it comes to that. Let's take a look at your revenue figures for your past financial year.
Yeah. So this one, Johan, it's an interesting one because obviously interest income is a direct result of whatever we do with advances, and that most of our book is variable, so it's really linked to prime, and we price based on risk. The more riskier you are, then you pay slightly higher, and if you are less riskier, maybe not so much. But it also depends on also the whole portfolio you have with us. We like clients that bank with us holistically, and they benefit, and it becomes a mutually beneficial relationship between us and them. The other side of our income, obviously, is non-interest income, which is really fees, like transaction fees are about 80% of it. And then you have trading income and then other income streams, but about 90 is between Forex and fees and charges. So fees and charges up at about 10.3%. Now, obviously, the controversial question will come around, are we overcharging customers? I think, but I don't think so. Because when we, how we look at fees is more around, we try to break it up in three ways. Really, there are some transactions as the world moves that we want to start discouraging because they are just too expensive to provide, and you find not lots of customers use them, and it's more a behavioral thing than a value add, if I can put it that way. And then there is core transactions, which some of it we cannot do away with. And then there's some that we want to really encourage, especially on our digital platforms. It's convenient. You can do it all of the time. You can do it wherever you are. And what we have seen is that mix between what we call traditional revenue streams and self-service electronic channel type income has shifted significantly. Now, a lot of our customers are now moving more to self-help, and volumes have just blown us away because somehow people now do more transaction versus before, and that really speaks to how transaction-based income really grew in the year.
But those figures would only have looked that positive if you invested the necessary capital to provide those platforms.
Yes.
So obviously you have done that.
Yeah, that's why I spoke about the importance of also investing for that future. And you may have seen in the media recently our mobile app release over the last year, and it's actually nice. I use it myself, and every time we have a new release or a version update, it just gets better and better and better. I even wonder whether I'll ever go to a branch.
Ever again?
I hope not.
We certainly had. Yeah. We spent enough time in the traditional banking channels. Speaking about digital banking, let's take a look at another slide, and you can explain to us what is happening there.
So I think this slide really speaks to what I just alluded to in terms of non-interest income. You can see that now 62% of our deposit transactions are taking place outside banking hours. This is amazing. Now awesome. It almost feels like we have opened a channel of income that we didn't have before. And that speaks because we only rolled out cash deposit taking ATMs in the last year or so. So to have that 62% now is quite remarkable, right? And if you had to split now transaction taking place at these devices versus the teller, so in the branch versus, it's now at 50-50, just after 1 year. So one can really imagine as the uptake and the rollout happens more, because obviously it's not in all locations yet, but we are really on the plan, as the IT spend shows, to really roll it out countrywide. And you can imagine now how that mix will be. And really this speaks to the future of banking, saying we must be taking low value, high volume transaction to self-service channels, so that we really only focus in the branch on relationship-based banking.
Precisely.
Advice. People really want to talk to us about structuring, not normal run-of-the-mill type of stuff. And already, you see the early signs of the benefit of that, and I'm excited about the year ahead.
You certainly sound excited, and yes, very much progressing well on your route to 24/7, 365 banking, because that is where the world is going now. A last question, since you are from Bank Windhoek specifically, and it is your 40th anniversary, do you have a message to your customers, and can you give us a little bit of a glimpse into what we can expect from Bank Windhoek going forward?
So if I look at, I think we are grateful that we have existed this long. Surely we couldn't have existed without the customers. That goes without saying, right? I think the customers are why we are here, and obviously all the other stakeholders matter. But I think that at the core of it, without the customers, we couldn't have been here. We have had a few activities you've seen in the media to celebrate the 40 years, the 40th year of our existence, and there'll probably be a few more coming. If I had to look forward to something next year, in the year ahead, is I hope to get to the billion profit, but times are tough, so we need to do this responsibly. We need to also be aware of the environment in which you operate, and just responsibly get there and responsibly ensure that the business is here for another 40. I think for me at least 40, but hopefully 100 will also.
Well, I certainly hope that I'm around for your next 40th anniversary, which of course will then mean that you are 80 years old, and we will not elaborate on how old I will be then. Thank you very, very much for your time. We wish you the best in your endeavors, and from Business 7, congratulations on 40 years.
Thank you very much. Hopefully I'll see you here next year with $1 billion profit after tax.
That will certainly be a date, because I'm pretty sure that you have got that target fixed.
Yes.